Well, Mark, what do you make of it all?
Well, I think we have little choice but to run with it. I mean, in his acceptance speech, the president-elect reiterated his expenditure plans on infrastructure in the U.S. to rebuild America, that it was going to be beautiful or amazing. And that's what Donald does. I mean, he builds things. And in the absence of any other information that we've had, for example, on his energy policy or any of these trade restrictions that he's floated before, I think the market has really embraced this infrastructural spending boom, and metals have blown out of the water. It's been phenomenal moves in copper recently, and copper to a certain extent playing catch up with some of the other industrial metals that have enjoyed some significant gains this year. Zinc is up 50-60% year to date, and nickel's up 30% year to date. So all of the talk at the moment about whether this spike is overdone in copper, potentially, but it's certainly lagging behind the rest of its complex.
Mark, I think a lot of focus will be on how emerging markets assets perform, and we're getting just so much pressure coming on when it comes to these currencies. We've got the Indonesian rupiah, really tumbling this morning. We've also got the yuan being set past 6.8 for the first time, I believe, since 2010. The rupiah falling as much as 3%, the lowest in June. I mean, weakness across EMs, this is not constructive for commodities.
No, it's not. And we saw that a year ago. And so what happens is when you get weakness in these emerging market currencies, specifically in Latin American metal-producing countries, for example, this acts to lower the cost of production and reduce any need of metal producers to cut supply, for example. In fact, it incentivizes exports and global supply. This also has effects with the soft commodity markets. The move in the Brazilian real recently has been significant, weakening. And so what happens is that sugar exports are maximized to maximize local revenue and elevate global inventory. So that depresses that area of the market. So it is an area to watch. It can offset some of these gains in metals, as you say, but it really depends on how these moves in emerging market currencies develop.
Well, now, are you looking at oil closely right now as well? I mean, OPEC's still the main player. We've got all sorts of promises coming from Donald Trump when it comes to the oil industry there in the U.S. Of course, a lot of this may be just pure rhetoric, as we all are speculating right now.
Certainly. With respect to oil and Trump, all we really have to go on at this stage is that he's supports U.S. energy independence. He's said that he would open up federal land, U.S. waters, exploration in the Arctic. This would support also hydraulic fracking. So we expect that to play out, certainly, but that's medium to long term. At the moment, the thing that we need to focus on is November the 30th. We need to focus on this OPEC meeting and see whether the comments from Algiers last month at the end of September play out into a meaningful cut or a cut at all. If we get a cut, we're in the $50 to $60 range. And if we don't, we're in the $40 to $50 range, and then most likely the bottom end of that range. So it's very important, and I think certainly, the energy market is most certainly focusing on that at the moment. And once we're through that period, then we can start looking, when we get more details on what Trump's plans are for the U.S. with respect to energy, on where that's going to play out.
Mark, your call on precious metals, I mean, is the only way is up, even though you are seeing a bit of a correction from the rally that we saw on the day that the votes were actually counted. I mean, if you take into account the uncertainties to do with Trump, Brexit, Italian referendum, we've got a number of European elections going to 2017. Silver and gold, I mean, looking pretty good.
They're looking good. The move in gold was disappointing. We anticipated at the announcement that Trump was winning a much bigger sort of a safe haven-driven rally in gold, a little bit like what we saw in Brexit. It was a very small rally and quickly retraced because of the response in equity markets, and there wasn't the sell-off in risk assets that would be needed in order to trigger a safe haven move. But gold in its wider context now, so looking at Brexit, as you say, that is still ongoing, a massive area of uncertainty. We've got the Italian referendum on the 4th of December, a minimum of 3 Eurozone elections next year. So that is supportive for gold, yes. Likewise, a new sort of developing dynamic really as a function of Trump is if he does commit to this infrastructural spending plan, as he said he would do, that might put increased pressure on interest rate hikes next year, which would be bearish for gold. So gold is tricky at the moment. I think silver's interesting. Silver has a foot in both camps. It sits in the precious metals camp and it sits in the industrial metals camp. Whilst it's not used in infrastructural spending, it does take a lot of its price direction from copper. So that's probably an interesting market to look at.